freaking recording. There we go. Be like, yeah, all right. Well, just getting started in here. Hum-de-dum-de-do-de-do. Okay, so this one is, I gotta do something about that. Yeah, that's an idea. Ooh, this is a great idea. I just thought of this. Who do you got? Alex is here. Big Tom. Big Tom. Big bad Tom. All right, wait. Dennis is here. Dennis, how's it going? And Brandon. Here as usual. Let me adjust this camera. There it goes. Nice. That worked. Now, let's see if we can do the same. Not now. Oops, and just right there. Nice. Macy's. Dave wants to look at Macy's. What's up, Bama Redneck? What is the minimum I can start with? C Steed. C Steed. You can start with anything. So what is the channel about? Well, Jerome, how are you doing this evening? Jerome, this channel is about investing in dividend stocks for a weekly cash flow using a safe trading strategy called covered calls, which is buying a stock and selling a call option, a stock option. So, yep, this is about stocks and about options and how we can get a safe, predictable, and consistent 1% per week. Jerry, do you think Walgreens is an okay stock? Oh, Jerry, we'll take a look at Walgreens tonight. We're also going to take a look at Macy's tonight. All right, so let's take a gander. Let's do Walgreens first, okay? Walgreens is one of those companies that has been sinking a lot lately. WBA. Now, before we get started, let me clear up a few things. Number one, let's get the disclaimers out of the way. Okay, I'm not a professional anything. The only license I happen to have is a license to drive a car or a motorcycle or a boat. I have no degrees whatsoever to give you any type of financial advice whatsoever. Matter of fact, what I'm doing here is telling you whatever I say, don't take a word for it. Do your own research. I'll give you some clues. I'll give you some hints. I'll take a look at stocks. I'll take a look at the charts. I'll take a look at the numbers. I'll give you my personal opinion. My personal opinion is not to be constituted as advice. Okay? So PG, you like that? All right. Oh, reverse the camera. Sorry about that, G. Big G. I like that. Big G. My grandson calls me Papa G. Yeah, gotta love it. Okay. It's okay. I'll trust your non-professional advice. Jerry, I just said it is not advice. Okay, this is just entertainment. I'm just telling you what I do. Okay, so basically you're Jim Cramer on TikTok. You know what? You could say that, but not really, because I can't be bought. Okay, Jim Cramer is bought by someone else. He gives out the crap that people tell him to give. You know, he'll put up a stock that he is sponsored and he gets paid for it. No, I don't do that. All right? All right, I was joking. No, okay, that works. Okay, so let's just jump in. Oh, wait a minute, let me finish up with the disclaimers. Okay, like I said, I have no college degrees whatsoever. Okay, I'll use your entertainment as trusted advice at my own risk. Thanks, Jerry. I'm going to take that in heart. But think about it. Okay, I'm going to tell you some stocks that I like. Now, these stocks have increased their performance or increased their profits for more than 20 consecutive years. Okay, wait a second. More likes can attract more viewers. You are the real deal. Oh, the real deal. The V in there kind of throwing me off. The real deal. Don't listen to TV people pushing their agenda. Hey, I'm going to agree with you 100%. I don't trust Jim Cramer. Neither do I. Thoughts on Kohl's. All right, let's start writing these down. We got Macy's first. right? Walgreens first, and then Kohl's. All right. So I have a different approach than everyone else does. Everybody has their own approach. FUBU. Okay, stock might explode. Never heard of it. So if I never heard of it, it's usually going to be a no. Now the reason why I say it's usually going to be a no, because I've been playing this game long enough that I know almost all the stocks that have 20 years of increased dividends and have weekly options available. Everything else is just a no. Not a dividend, but it's good news. Scotty, I can understand what you feel you might think is good news. You've had that cough for a while now. I've had the cough for almost a year. Okay, I have what you call, hold on, I get the right terminology. Post-nasal drip syndrome. Something in the air makes my, what do you call it? And then it drips, post-nasal drip, right down to the bottom base of my throat, right down here. And it makes me cough. The only thing that makes it go away is water, lemon, honey, stuff like that. Of course, I could take some prescription drugs over my dead body. I don't trust any of that crap. Now, if you come up with a natural remedy to get rid of it, fine. I'd be more than happy to take a look at it. Starbucks, string cheese. String cheese. That's an interesting name, string cheese. All right, so let's get started. This is what we're looking for specifically. But before I do, just to warn you, there are 27 other people that look very similar to me. As a matter of fact, they go into my channel, they take my videos and they post it as their own. So there's 27, as far as I know, imposters pretending to be me. So as you are here, I am talking to you and I'm letting you know. Number one, I don't do cryptocurrency. Number two, I don't do futures. I don't do, what's that other one? Forex. I only do dividend stocks, specifically those good dividend stocks that are continually increasing. Also, I don't do WhatsApp and I don't do Telegram. So if you get a message from me or someone pretending to be me asking you for money for something one way or the other, yep, ain't me. Okay, as a matter of fact, I actually tell people here, if you really want to talk to me, I mean really one-on-one, honest, no holds barred, my honest opinion, give me your number. I will give you a call. DM me with your number. I will give you a call and we'll chat, because this is not right for everyone. Hey, Dividend, what's happening? Boomer Boy, SQ Square. Yeah, no, it hasn't been in business long enough. Divi Dave, hey James, I like your attitudes on meds. Yeah, hell no. They actually gave me some medication to get rid of it, and it worked great until you read the bottom, you know, the fine print, the shit they hope you don't read. Yeah, no thanks. I assume I'd rather cough than have that crap. I don't understand that Forex stuff. I think it's witchcraft. Okay, it's interesting because if you think about it, the global elites have some kind of, what do you call it? Validation to their theories. Okay, so one currency would be cool worldwide. One currency would be great. But one currency not controlled by anyone. That means let the deals be private. It ain't nobody's business what I do with my money. Okay, why the government needs to be involved? Beyond me. But they do have a good idea about that idea. Okay, so I'm really hoping cryptocurrency does catch on, because it is the people's money. It allows us to buy and sell stuff without any interference with the taxman and his greedy little fingers. Okay? Now, if they're trying to give you the bullshit that, we're trying to keep from, what do they call it? Money laundering and illegal activities. Well, if you look close enough, you will see the people trying to protect us from that crap are the ones doing the most damage. All right, anyway. Dennis, I was looking at the calendars on TOS. Looks like I still need to customize one with the goods. Okay, Dennis, I got that. Now, if you're part of the morning trading group, just mention it in the morning trading group. After we're done with all our trades, I'll walk you through it. It's really not that difficult. Okay, VLO seasonality indicates down direction for a while longer. I'm going to write VLO down also. We'll take a look at that one. VLO. Valero Energy. All right, so Pan W. I never heard Pan. Wait a minute. Pan W. Pan W. Sounds familiar, but I don't remember trading it. All right, so all that out of the way. All right. Now we're all adults here. All right. I find that it is your own personal responsibility to take care of your own money. All right. Nobody has more interest in your money than you. I mean, I have a whole bunch of things I can blurt out, but it is what it is. You know, we're all adults. At some point in time, we're all going to need to retire. We're going to need to have some source of income coming in, and that's where I'm coming from. I'm not coming from as a young person still in work, still in the workforce, able to make money and then affect my retirement. No, I'm actually retired. And the 1% I get on my portfolio allows me to pay my monthly bills so that I'm comfortable. Now, at this point in time, I'm extremely healthy. I don't take any medication, so I don't have any huge bills or huge obligations I need to take care of. But they will probably show up in my 70s, 80s, and 90s, so I do have to have my account grow a little bit and still be able to have enough money to pay for my living expenses, because after all, we humans are the only species on the planet that have to pay to be here. Anyway, we're taking a look at Walgreens. First of all, I always, anytime I look at any stock whatsoever, I always want to look at 5 things. First of all, on the chart, this is the 1-year chart. First thing I want to see is the high of the year. Second thing, the low of the year. Third thing, where was it? Where is it currently? And what direction is it going? Those are the 5 things I want to look at on any chart. Once I see that, and once everything's okay, then I want to move to the next step. What am I looking for specifically? Well, I don't want the current price. I don't want today's price being at the high of the year, because I don't like to buy at the high of the year. I would prefer it to be somewhere in the middle or at the low, because at the low I know that's where I'm going to make the most money, because you make money in the stock market buying low and selling high. So if it's a good company and it's now down here bouncing off the bottom and going back up again, because that's all they do, they go up, they go down. There's going to be a point where it won't go any higher, and there's a point where it won't go any lower. That's where I want to be. Getting good at that video thingy. Cool beans. Okay, so once you get past that, then I want to take a look at the numbers. Well, what am I buying it for? Okay, first thing tomorrow, we all know today is Sunday. Tomorrow morning starts a whole new week, week number 8. 8 for the 3rd quarter. 4 quarters in the year. Okay, each quarter has 13 weeks. Tomorrow, or you could call it today, but there's no trading today, so we'll call it tomorrow. Tomorrow starts week number 8 for the 3rd quarter. All right. Also, week number 8 would be week number 34. Is that correct? 26 and 8 is, no, 26 and 8 is 34. Yeah. Week 34 for the year, week 8 for the quarter. All right, great. First thing tomorrow morning, Walgreens, here's the price right there, $10.93. I want to look for the closest strike price. Okay, for those of you that are new here, strike price is, let's put it this way. Tomorrow morning, I actually don't have any Walgreens. So let's just go through this exercise. If I don't have any Walgreens, I want to buy some tomorrow morning. Okay, first thing I want to do is what am I paying for it? Right up there, $10.93. Great. Now, once I buy 100 shares, I can sell somebody the rights, not the obligation. The right is kind of like if you have a car standing inside a yard, put a for sale sign and someone comes, hey, I liked your car. Let me give you $100. I'll be back on Friday to give you the balance. This is kind of the same thing, but you got to buy the stock first. So Monday morning, I will buy the stock. Let's say I buy 200 shares. Great. 200 shares will allow me to sell 2 contracts, because each contract controls 100 shares. So 2 contracts, 200 shares. All right, so if I buy it at $10.93, I can buy it and pre-sell it, because that's what a call option is. Well, a call option in a covered call scenario. There's a lot of trading strategies out there. I'm trading, I'm showing you, I'm giving to you the simplest and easiest trading strategy that I know. You buy a stock, you sell someone the rights to buy it from you for the same price you paid for it, and you get to collect what's called a premium. So what are the advantages and disadvantages to that? The advantage is if the stock is going up, wait a second, let's jump ahead for a second. At this moment in time, 1093, the $11 strike price is going for 11 cents, which is over 1%, and that's what I'm looking for. So here's the thing. If I buy the stock first thing tomorrow morning, I buy 200 shares at the opening price, 1093, I can sell it to someone for the exact same price I paid for it. Now, why would I do that? Well, by doing that, right, if I buy it 1093, sell the $11 strike price, which is only 7 cents higher than what I paid for it. Now, 7 cents is not a lot of money, but what I'm looking for this number right here. This is what I can sell a contract for, kind of like a deposit on a car. Hey, I like your car. You're selling it, great. Well, here's $100. Hold it for me. I'll be back on Friday. Same thing. Okay. You got this stock, great. I want to buy that stock from you. $11. Okay, fine. Well, give me some consideration to let me know you're serious, and then I'll take my stocks off the market. And you were the only one that has the opportunity to buy it between Monday and Friday afternoon when it expires. Now, what do I mean by Friday afternoon when it expires? Well, see these little dates right over here? 23 August, well, that's this coming Friday. 30 August, that's 2 Fridays away. 6 September, that's 3 Fridays away. 13 September, that's 4 Fridays away. Every single Friday. Okay, every single Friday. They don't even skip a Friday. Every single Friday, they have a call. They have an option, either call option or put option, that expires. So all these options are going to expire 4 o'clock Friday afternoon, 23rd of August, which is this coming Friday. All right, so if I'm buying it for that price, selling it for this price, collecting this premium right there, I'm getting 1%. What does a stock have to do? Absolutely nothing. Okay? Right now it's at 1092. I would like it to hit 11. So buying it is ideal when you're in an upward trend. Well, how do you figure that out? Well, that's what the charts tell me. Right at this moment, we're looking at the 1-year chart. So August 18th, right here, 2024, August 18th, 2023 is at the other end of the chart, because this is a 1 year, it's a whole 1 year. August 18th, 2023, August 18th, 2024. Okay? And it slowly ticks away and goes forward. So the 5 things I want to look at: the high, the low, where was it, where is it, what direction it's going. Cool. Now that I like that, I want to change it, and I want to look at the 90-day chart. Because the 1 year chart gives me an idea what the high and low is and the overall direction for the year. But I'm not buying it for the overall direction for the year. I'm buying it for the next 5 to 10 days to see if it's going to go the direction I would like it to. Well, first thing we want to do is take a look at the 90-day, which is the last 3 months. That gives me an idea of where it would go quarter for quarter, okay? Because it's 3 months and a quarter, okay? So 3 months ago, it was at 1550, and it went as high as 1620 is the high of the 90-day time frame. High, low, was, is, direction, so on and so forth. Then we come to here, big huge drop down, and look at it, down, up, down, up, down, up. So it's on the upward trend at this moment in time. But that's the 90-day chart. That just gives me an overall idea of what kind of a pattern we see. Okay, up, down, up, down, up, down, up, down. Cool beans. I want to go to the 30 days, because 30 days gives me a really good idea of where it's going to be. On the 19th, right there we go. So that paints a totally different picture. The high, the low, where was it, where is it, and what direction it's going. Well, cool. Down, up, down, tiny bit up, down. Now it's going to the upside. But look where it is, 1092. Look what the previous high is, way up here. Okay, the previous low is here. This is what it's bouncing off of. 30-day high, 30-day bottom. Now she's going to the upside. How far is she going to go up? Well, that's going to be up to you and me. What do I mean by that? Because we buy and we sell. We are the ones that create this mess. We say when it's too high, and we say when it's too low. So at this moment in time, hypothetically speaking, if if you remember your elementary school days with teeter-totters, down, up, down, up. So when one side goes down, the other side goes up, okay? So it goes down, it goes back up again until it reaches a high where you and I say, no, 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 it ain't worth that anymore. Okay, at this moment in time, here's the bottom. This is where we believe the bottom for Walgreens is. So ask yourself some questions. Walgreens has been in business for over 100 years. They have 8,700 stores worldwide. Now they're running into a few issues because the current administration doesn't want to prosecute theft. You're legally allowed to go into a store, steal a bunch of crap, walk on out, and they're not going to prosecute you. So people are shocked and say, wait a minute, why are the stores closing? The stores are closing because they're losing money because the government won't prosecute. Because some people think it's not fair, but whatever. Don't get me started. But anyway, but there you go. It's plain as day. I can get a third grader say, oh, look, it went down, it went up, it went down. Well, where's it going to go now? Well, now it's going to go up. All right, that's just logic. So let's take a look at the seasonality chart. Now, the seasonality chart, totally different. It's still a one-year chart. January 1st, all the way here to the left. December 31st, all the way here to the right. The blue line represents the current movement. Where has the stock been moving so far this year? January 1st, way over here. August 18th, or whatever the heck what date it is, right here. Okay, the red line up there, that represents 10 years worth of average movement from January 1st to December 31st. I want to take a look at this area right here. Looks like she's going to go down a little bit more, but I want to zoom into that. So how do I do that? I take my cursor, put it on the little blue dot right there, click left, drag right, and once that lights up, that's about 2 weeks in time. Okay, so bring us back up here. This is where we are. And it looks as if she's going to come down and dip a little bit before she comes back up again. Look at the dates. There's the 16th, the 26th, September 9th, so forth. So that's 1 week, 2 weeks, 3 weeks. Okay, so for this week, she's basically going to down a little bit and go sideways. Now, that's not guaranteed. That's just historical performance. That's driving forward, looking in the rearview mirror, because that just shows you where we were before. Susan, hey, honey, how are you? Susan, Amy, oh my goodness, haven't heard from you in a while. You gotta either send me a Lisa or a text or something and just let us know what's going on with you guys. Anyway, tell Mike and the kids I said hi. Anyway, so as we progress forward, all right, you gotta ask yourself a couple of very important questions. Of course, question number one, okay, is do I like Walgreens at this current price? Well, take into consideration the current state of affairs. Well, yeah, they're going to close 25% of their stores. That's going to take anywhere between 6 months to a year, maybe 2 years, to close out all the stores to see what transpires after that. Okay, we already got kicked in the shins. Now we're going to figure out how long it's going to take us to heal. Basically, that's kind of like what it is. Okay? The stock has dropped. This is not the bottom of a 30-day period. It's not the bottom of a 90-day period. It's not even the bottom of a year. If you take a look at the long-term chart, this is the bottom of a 7-year period. Okay, it could be even further back. Okay, but it kept going down, 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 down. At what point is break even? Well, just for the fun of it, let's go take a look. Wait a second. Wait. I told me it was there. Let's see if it's actually there. Yeah. It's not there. He told me it was there. I don't see it. I want to find the book value. So let's put in Walgreens in here. WBA. This is Yahoo Finance. Now Yahoo Finance gives you any kind of information on any type of stock you want to take a look at. So I want to take a look at Walgreens. I want to take a look at statistics. I'm going to slide down and I want to find the book value. There it is right there. Okay, check it out. The book value right here for Walgreens is $15.80. Think about that. What does that mean? $15.80 is the book value. That means if they took everything, pens, paper, pens, pencils, erasers, crayons, lipstick, broken pieces of chalk, anything and everything owned by Walgreens, and they liquidate it. I'm talking complete liquidation of 8,700 stores and the headquarters. You're going to come up with a value of $15.80 per share. Well, right now you can buy the stock for $10.92. That's 30% below the value of the company. Anyway, is what it is. So if I like it, I buy it. 1093, sell the 11s. I'm going to collect 11 cents. 11 cents is more than 1%. That's what I'm looking for. 1% per week. Safe, predictable, consistent. 1% per week. That's over 50% per year. If you're okay with 50% per year, it's a simple, safe strategy. So we have, holy shit, 99 questions. I'm not going to be able to go through anything. Pan W. Uh-oh, I missed all those questions. Anytime you hit the screen wrong, it always goes up to the newest ones. I missed those. What's your opinion on ticket Trump? Okay, I'm not gonna do politics. Sorry. Hey James, I like your attitude. Thank you. I don't understand Forex. Forex is really not that difficult. You're comparing one currency to another currency. All right, and it's very much news related. Okay, so if you're gonna expect making money in the Forex market, yeah, it goes 24 hours a day. Because the sun is shining somewhere in the world and the Forex market is open somewhere in the world. So you have to really be active and listening to the news and all that stuff if you want to do any money in the Forex market. In my humble opinion, I don't do it. It was just too time consuming for me. All right, I can't even read that name. Guacamole the Third. Oh, that's an interesting name. What were your parents smoking when they named you that? Just kidding. Do I invest in biotech? Here's what I invest in. I invest specifically. Now I'm going to say it really slow so that you can understand, because there's a lot of new people here. And see if you can grasp this on the first try. All right. So for my personal money, I only invest in companies that have historical performance of being profitable. That's a weird concept, isn't it? How do you figure? Well, if you take a look at a company, what makes up a company and all the inner workings of a company, there's one item that will overshadow everything else if you understand it. And that is the dividend. What do I mean by that? Well, the dividend, unlike what you may think, the dividend is a portion of the company's profits that are given to the investors. So you have two types of companies. Well, actually you have three types of companies. You have private companies, which you and I can't invest in, but you have two public companies. One will take all that profits and put it back into the company for future growth. That's great if you're young and you have time to do that. But as a retired person who has to hold on to his money and not take those kind of chances, I look for the group number two. They take all the profits and they share the profits with the investors. So here's the thing. If a portion of the profits goes to the investors and that portion increases every single year, not once in a while, every single year, well, logic, reason, and common sense will tell you that company's consistently profitable. Well, they can't give out money unless they're profitable. And if that money consistently increases, there you have it. So, me personally, I like companies with 2 decades, 20 years of increased dividends. Now, I checked earlier during the week, there's 9,598 companies available to invest in at any time. So you can invest in any company you want. Why is it I only like these? Well, because they're consistently profitable. And it's like, why would I need to explain that? That should be logic. that should be, oh yeah, that makes sense. Of course it does. Now, don't get me wrong. There's nothing wrong with buying into a company that takes the profits, put it back in, and then the stock prices go up. Well, that's great. Unless, of course, you're retired and you can't take that risks. Okay, do I have 10 to 20 years to put bunches of money into different companies and wait for it to go up? No, I'd have to go back to work. Go do that 40-hour week thing. No thanks. I have enough to keep me comfortable. 1% a week is all I'm looking for. And I'm only looking at companies that consistently increase their dividends. Now, you may be asking, who are they? Well, hopefully you got a pen and paper. You ready? You ready? You ready? Here it comes. Here it comes. Dividend Kings, 50 years of increased dividends. 5 decades of increased dividends. Not once in a while, every single year. Now, there's some companies that have increased their dividends for 70 years, 60 years, 70 years. Can you believe that? Kennedy was in office back then. Kennedy was probably still in diapers 70 years ago. But anyway, it's not the point. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then, of course, I like to throw in Warren Buffett's stock list. That 5 list right there will eliminate 97% of all the other companies. Now, when I say 97, you may think, well, what the hell's left? Well, what's left is about 300. 300 companies. Now, I don't have enough money to buy all 300. Well, I could if I bought, 2 or 3 shares of this, 2 or 3 shares of that, 2 or 3 shares. Yeah, that doesn't work for me because then I'm only collecting the dividend or the appreciation. And yeah, that's not enough. So what do? I take all my money and I invest. I take 4 or 5 positions every single week, and I base it specifically on the calendar. Okay? Now, each one of these little green dots you see represents what is called the EX date. Now, there's 4 dates to remember when you're investing in dividend stocks. Number 1, the announcement date. Self-explanatory. They tell you what they're paying and when they're paying it. Number 2, this is the most important one, the EX dividend date, or the EX date. That's represented by these little green dots. Okay, that is the last day the stock trades before the dividend is paid out. Now, if you're chasing your dividends, great, fine. The next important date, date number 3, is the date of record. See that? The date of record. Whoever owns the stock on the date of record is entitled to that dividend. 4th date, self-explanatory, the payment date. Okay, so why is this important? Well, I take those 300 companies that I like, I throw them into the calendar, and the calendar tells me when do they pay their dividend, because they all don't pay it on the first date. Let me go back all the way to January. It might be easier to understand it. Okay, so here's January's list. Come on, right there. Here we go. January was the beginning of the year. So this is when the whole thing starts. Look at week number 1. Comcast, The Gap, Cisco, American Express, Bristol Myers Squibb, JP Morgan, Cisco. This is just one of my list. 2nd week, MasterCard, Verizon, AT&T, Oracle, Abbott Labs, FCX. That's week number 2. Week number 3, EOG, Procter & Gamble, is that Zydus? I think it's Zydus, I think it is, ZTS, Apache, Bank Mellon, Caterpillar, Colgate Palmolive, and it goes on and on and on. That's just month number 1. Now remember, there's 4 quarters. January, February, March is quarter number 1, 13 weeks. Week 1, week 2, week 3, week 4, week 5, and let's go to February. Okay, week 6, week 7, come on, week 8, week 9, week 10, and we're going into March. Week 11, week 10, week 11, week 12, week 13. That's 13 weeks. I counted wrong somewhere. But there's 13 weeks. Okay, 13 weeks, 26 weeks, 52 weeks in a year. 13 times 4 is 52. Okay, so those are all the companies I like in this particular list. Now, I have a few lists. Let me pull it up right here. These are my personal lists. Okay, companies that are over 100 years old. I like that list. Okay, calendar spreads, totally different strategy. Dividend Aristocrats, Dividend Champions, Dividend Contenders, Dividend Kings, high volume stocks, Warren Buffett's lists, and then a few others. all designed to get me a 1% safe, predictable, consistent 1% per week. So to answer your question, that was a long explanation to no, I don't invest in bio stocks because they don't have 20 years of increased dividends. And those that do have 20 years of increased dividends, I stick them into the calendar and the calendar tells me when to look at them. That's it. It's actually that simple. Now, you might be asking, how did I get the strategy? Well, in 2008, when my daughter was 9 years old, okay, she wanted to trade like daddy was trading. So here's the thing. It had to be, I had 5 criteria to overcome in order to create a trading strategy for a 9-year-old. Number 1, it has to be simple for a 9-year-old to understand. Now, we're all here over 18 years old. So if a 9-year-old little girl can understand this, adults have a tendency to complicate things and mess it up. Simple, safe, predictable, consistent, and no way that she could lose. Because we all know if a 9-year-old little girl gets involved and she loses money, she's going to start crying, mama's going to get involved, and the couch, sometimes you may think it's comfortable, but it's really not that comfortable. You know what I mean? Okay, so simple, safe, predictable, consistent, and no way she can lose. Great. All right, fine. Now you got a strategy. Here's the rules. And they're simple rules. Rule number 1, never buy something you do not understand. If you cannot give me a 15-second elevator pitch as to why you bought it, where you got in, why you got in, where you're getting out, what your profit's going to look like, if you don't have some good information on a company, don't buy it. If you don't understand it, don't buy it. And then go into it as if you're going to buy it and hold it for a long period of time. Okay? Now, to be 100% honest, the longest I've ever held anything, I've been investing for over 20 years, longest I've ever held anything is 9 months. And I didn't do it because I wanted to. Okay? I did it because the stock went down. And remember rule 2, never sell at a loss. Okay, stock went down, and it took a while for it to come back up before I can get back out again. So, wait a minute, I didn't go through all the rules. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. That's where the dividends come in. Okay, 20 years of increased dividends. That's what I like. You guys have to figure out what you like. Because remember, I can't tell you what to do. I mean, I could, but I'm not going to. I believe everyone should be responsible for their own actions. Okay, isn't that weird? We all should be responsible for our own actions. All right, so never buy something you don't understand. Never sell at a loss. Make sure it is consistently profitable. Like 20 years, you guys can pick 10, 15, 5, 2, 1, whatever. You guys got to figure out what you like. Rule number 4, make sure the company has weekly options. And the reason why I want weekly options is because I want a paycheck on a weekly basis. I grew up in the 60s, 70s, and 80s. What did we do? Well, we went to work Monday morning. We did our work all week, and what happened on Friday? We got paid. So what am I doing now? I'm going to work Monday morning. I'm deciding what I want to buy on Monday. I check it every day, Tuesday, Wednesday, Thursday. I check it, and Friday I decide. I go back in to see where am I at? Where are my positions? What does it look like? So Monday through Friday, great. I want to buy it on Monday. I want to sell it on Friday. I want to make my 1%. So to let you know how I have been doing, let's take a quick look at this. Now, this is information is available online anywhere you want. Not anywhere you want, but it's available online. What you're seeing behind me, these are my trades for the year so far. Just this year. Every year, I started at week 1. 0, 0, 0, okay? These are all my trades. So week 1, January, I had General Motors, Macy's, Ford, CVS. Okay, the profit for week number 1 was 2.12%. Week number 2, Ford, Lowe's, Clorox, General Motors, for Macy's. Okay, week number 2 was 1.3. Now you can take a look. They're all almost all up there. I didn't do last week's and the week before. I'm a little bit behind on updating it. Okay, but all the numbers are there. All my purchases are there. Okay, MPW, AEO, Bitto, Macy's, Kohl's, Walgreens, Wynn. They're all there. You can check all my trades. Thanks for breaking down calendars, blah, 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 blah. Okay, so I still got 99 questions to go through. Holy cow. Do you do stock options? Yes, I do. Keep going, questions, questions, questions. Only covered calls with this strategy. Yep, thank you. What afford are you single? Oh my goodness, Pete. Not quite sure what you mean by that, but all right. Covered calls, okay. What platform? The platform that I am using is called Think or Swim. Now, Think or Swim, it used to be a individual trading platform, but it got bought out by TD Ameritrade. TD Ameritrade got bought out by Charles Schwab, so Charles Schwab owns it now. You can download it. You can download this for free to your computer, and Charles Schwab will let you use it for a period of time, but eventually they would like you to trade with Charles Schwab. But it's all up to you. He does, but covered calls by the stock, blah, blah, blah. Okay, Andrea, I want to get into Walgreens tomorrow. Is it too late due to the earnings on Tuesday? Ooh, Andrea, that's a great question. Now, I have no idea what the earnings are going to be. I have no idea what they're hypothetically going to be. Because, you know, they have those little whispers and then they have the actuality. All right. I have no idea what it's going to be. I really don't pay much attention to earnings. Because I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. Okay, sometimes it does, sometimes it doesn't. Okay, and a lot of times the market maker will use the information to manipulate the pricing. So I don't pay much attention to it. You either like the stock or you don't like the stock. Okay, so let's pull up Walgreens, because somebody mentioned something about WBA, the dividend. Okay, now we are in August, right? August, here we go. August 2024. There's Walgreens right there. Okay? The dividend is going to be this Wednesday. Okay, so here's Monday here. Where's the earnings? Okay, there's no earnings. July? No? Where's the earnings for Walgreens? You gotta be kidding me. So the earnings for Walgreens was in June. Okay? So where's the next earnings? June, July, August? I have no idea when the next earnings are going to be for Walgreens. Not July. Not August. September's a little too early, so it's probably not going to load for September yet. All right, is what it is. Anyway, let's keep on going. I'm in. This is not true at all. Liquidation would occur at that level and their debt would be paid. Okay, so ZRDK apparently doesn't understand. No, I don't want to insult you completely because you may or may not understand, or you may be missing something. Okay, what a bookkeeper's job is to balance the books. Okay, balancing the books means debts, obligations get paid first. Liquidation, sell off everything they own, everything they owe. Once that is done and over with, that's when you come up with the book value. Okay, the book value is after everyone has been paid. Okay, all your debts, all your liabilities, all that crap. Sell off everything. 15 and change was the what do you call it? Book value for Walgreens. Okay, keep on going. What do I think about AI? I've seen enough Terminator movies that I don't trust computers as far as I can throw them. Okay, and I really feel uncomfortable about being replaced by a computer or by a robot. Could we look at NEE, Nucor Energy? NEE. All right, I wrote it down. Let me finish up with the questions first, and then we'll take a look at some stocks. I don't want people to think I'm ignoring them. QQA. Q. I can tell you no now, unless you want me to wait and tell you no after I pull it up, because QQQ is going to be a no. ULTA, that's going to be a no also. 86. What stock are you? I'm not a stock, I'm a person. I don't know, I don't understand that question. 20 years increased dividends. Yep, yep, yep. Changes, blah, blah, blah. Dell, ripping tomorrow. Ooh, Dell. Dell. All right, I wrote Dell down. I actually, oh, wait a minute. Did I get rid of my Dell? I think I did. Yep, I got rid of Dell in that account. This account, I got rid of Dell also. Okay, so I sold my Dell. Okay, I had Dell last week. It got sold on Friday, which is basically what I was looking to do. Say it again, but slow. Listen, those way too fast. Yeah. Write it down in the calendar, please. What calendar do you use? All right, now when I say I like Thinkorswim, well, Thinkorswim has a calendar right there. Thinkorswim also has the seasonality chart. Thinkorswim also has what I've never seen anywhere else. It's called a trigger trade, which means I can do 2 trades at once, get charged 1 commission, be in and out in 1 day with my profit in hand. Okay, no other company I know of does that, because most companies you have to buy the stock and then wait. James, I've been asking this question for all of 2 weeks. Does the $20 Patreon membership show you the upcoming stock picks? No, it does not. Okay. And Warren Buffett's list. Hey, 86, thanks for that. Dividend Kings, Aristocrats, Champions, Contenders, and Warren Buffett's list. JJ King, Aristocrats, Contenders channel. Yep, got it. All right. Coleman, you see that horse shot. Okay. So you research the stock and find good companies and put their dividend dates on the calendar. I don't. The computer does it. You can go to almost any, go to a website, let's say Google, Bing, Yahoo, one of those search engines, and just put in EX dividend calendar. And you get a whole bunch pop up. I just like the fact that this one's right there. Okay, it's already in the software. It's already in with my my watch list. Okay, that's what I like. Trading is all about making money from those who are impatient to wait. LED introductions, cool beans. Interesting way of looking at that. Okay, why do you like hollow green candles and solid red? Is it helpful? No, not at all. Does it give us access to the stocks you are watching overall? Let me see if I can answer that question in another way. Okay, hold on. Well, who was that? The feline vine. Okay, so the feline vine, let me answer this question for you. Now, when you go here to my webpage, the10minutetrader.com, and you click on any one of these boxes right here, what pops up? MPW, CVS, Walgreens, NEE, somebody wants to take a look at NEE, which is Nucor, General Electric, Siri, and MPW. Well, there's the stocks right there. They're already listed. Okay? Now, if you go back, take a look at this right here. Okay? Week 1, well, there's the stocks I picked. Week 2, there's the stocks I picked. Week 3, there's the stock I picked. Now, if you take a look at week 1, okay, CVS, Ford, General Motors, Macy's. Okay, look at this account. Ford, Comcast, LUV, Southwest Airlines, General Motors, CVS. That's week 1 of the first quarter. Okay, so let's go week 1 of the second quarter. Okay, week 14, which is week 1, second quarter. Macy's, Albemarle, JD, Paramount. No, that's not quite right. Bitto, JD, Albemarle, AT&T, Macy's, and AEO. Okay, that one. Macy's again. So basically, you can go, let's go week number 1 for the third quarter, which would be week 27. Yep, week 27, week 1 of the third quarter. WBA, okay, Walgreens, Dell, MPW, Kohl's, FCX, Win. Okay. So that basically tells you all the companies I'm looking at in the first quarter, in the first week of the first quarter, second quarter, and third quarter. All basically the same. They're all there. You just got to do your own due diligence. Now, for those that are in the morning trading group, which by the way is $100 a month for those that are serious and want to be able to watch over my shoulder, join a bunch of people, because we also have a private Discord where we all talk to each other about that to help each other out. We're looking for a safe, predictable, consistent cash flow. All right, so Monday, Tuesday, Wednesday, Thursday, I'm on at 9 a.m. until 10 or 11 until you guys are done asking questions. Friday, it's 4 p.m. only, 3 p.m. only because the market closes at 4 and we want to make sure all our positions are done and over with. All right, we looked at Walgreens. Let's go a couple more questions. Free to think to live. The style of my charts, I'm not quite sure which you prefer, okay? Because there's a lot of different ways of looking at the exact same numbers, okay? Red, green, all the same. The high, low, where did it open, where did it close, volume, okay? Looking at whatever chart I'm looking at still gives you the same numbers. What calendar do you use? Well, I use the one that's in Thinkorswim. Mark wants to look at Pepsi. Pepsi. P-E-P. There we go, Pepsi. Well, host is quite honestly the most sincere and knowledgeable I've heard, frankly, ever. Well, alrighty then. I'm going to take that as a compliment, I think. Xavier. Man, short-term capital gains and NIIT tax always gets me. Ooh, I like it when people bring up tax information. Okay, so here's a funny analogy or a metaphor. Okay, if you're worried about taxes, that's kind of like the guy going to the Rolls-Royce dealer asking, "Hey, what kind of gas mileage does this thing get?" Let me clarify. If you're making 50% per year on your investments, it would be a wise idea to have a conversation with a tax strategist or a tax planner to figure out the best ways for you to trade. The absolute worst way to trade is to have it in your own name, okay? A trust, a corporation, an LLC, somewhere to separate it from you, but you still have control. Now, I can't tell you that legally, but it only makes sense. Because if you had all your trading done in a corporation, well, then you're taxed at the corporate level. The end. Losses from the corporation, well, let's say the corporation has to buy a house to house the CEOs and have your meetings, blah, blah, blah. And the corporation has to have a new car or a new lease. That's also a tax write-off. So profits from one entity can be offset to losses of another. You really need to talk to a tax strategist when it comes to taxes and profits in your trading. Circle Project. How are you? Were you in the MSN Money Forum? Nope. Xavier Seabreeze. No, they don't. You won trades. Taxes are part of the business. Yeah, but you really do need to talk to a tax strategist. Yeah, paying 50% is a bit harsh in the long run. Well, of course it is. Imagine that if you make 50% and then they take 50% of that, then you only make 21%. I do all my trading inside a 401 and a Roth. A Bama Redneck, I'm going to see the simplest and easiest and most polite way of saying this. Dude, you're really going to check the fine print in that piece of shit. 401k is not your friend. Seriously, you have to take a look at the fine print. Get it out. All right, no. I can't give you any advice, but I'm just saying. I have a job for liquidity. Okay. Nobody pays 50%, 37 cents is the top. After that, you make enough. Yeah, okay. Think blah blah blah. I did it with state. Ford looking good, right? Yep. Did I miss the fifth rule? No, fifth rule is make. Oh shit, that's right. I didn't do rule number 5. I was thinking to myself, So here's a little bit of advice from somebody in their 60s. Don't get old. It's, it's, not, it's not as easy as some people think. You don't have to do anything. You just naturally get there. Anyway, 5 rules. Rule number 1, never buy something you don't understand. Never sell at a loss. Make sure the company has consistent profits. I like 20 years. Weekly options. I like a weekly paycheck. Rule number 5, make sure the numbers work. What do I mean by the numbers? Well, the numbers are, what am I paying for it? Okay, in this example here, $10.93 right there. Put the cursor up there. $10.93. What am I selling it for? I'm selling the $11 strike price, and it pays 11 cents per share. Okay? 11 cents per share is more than 1% of the purchase price. Okay? Then I want to take a look at the chart. Is it high, low? What direction is it going? Make sure the numbers work. Okay? What am I buying it for? What am I selling it for? What is the chart telling me? 5 things I want to see in the chart. The high, the low, where was it? Where is it? Where is it going? Okay? Down, up, down, up. That's all stocks do. They do not come to your house, take your dog out for a walk. They do not change the cat litter. They don't. They don't take out the trash. They don't make your bed and put little candies under your pillow. They don't do that. They go up, they go down. They go up, they go down. None of this, that's all they do. And I don't know how to say that any more politely than that. They go up, they go down. You trade enough, you'll be tracked with NITT tax. It's not cheap, but the price you pay it on short term. Okay, Xavier. Now, I'm not quite sure if you heard me or not, but I've been doing this exact same strategy for the last 15 years. I've been trading for 20, but this I've been doing for 15 years. Now, I know you don't know me. You probably don't believe me, but here we go. Let's take a look at this, because this is kind of funny. Okay, kind of funny. Some people find humor in it. Here we go. Here is my YouTube channel, The 10-Minute Trader. If you've seen any of my videos, it's always, hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Okay, should take you 10 minutes to do your trades. Now, first thing I want to look at, videos. Oldest videos. Okay. Now, here's the little princess herself.
That website called Thingy, which my dad doesn't let me call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting
over 20 days in the whole January. Well, I think you just one the whole year and still make up 20 days. 20 days in the month of January? You do 2. One every January, 2 February, 2 March. Blah, 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 blah. 24 the whole year. That's me. 12 years ago. 50% per year. That's okay. I did that video 13 years ago when my daughter was 11. Okay? Now, I've been doing it for quite a while, saying the exact same things over and over and over again. So, when it comes to taxes, I kind of know what I'm talking about in my situation. That's why I always tell people, when it comes to taxes, you need to talk to a tax strategist or a tax planner. Okay, not a CPA, not a bookkeeper, not a tax preparer, a tax strategist. Someone that can walk you hand in hand to show you how to legally pay as little taxes as possible. And you just have to be able to want to do it. But some people don't mind paying taxes. Me, I don't like it. I'm missing some questions. 10-10, got it. Macy's with a $16 sell put. Okay, Tyrese, I'm not quite sure what we're talking about. Garrett, October 10 is earnings. October 10, okay, I have no idea what we're talking about. Would you recommend debit or credit spreads? Oh, Brandon, okay, now, I like both credit spreads and debit spreads. However, I do not teach those here, all right? Here, I teach one strategy only. It's one of the safest strategies there is. It's called the covered call, and I couple it with dividend capturing. So dividend capturing and covered call writing Put them together, you get dividend capturing 2.0. That's what I call this. You buy a good dividend stock company just before the dividend, because stocks have a tendency to go up before the dividend comes. Okay? Macy's pays sweet dividend. Yeah, it's about 2%. But the credit spread and debit spread, I don't teach those here, because if you think of it this way, the strategy I'm teaching you here for free, no strings attached, you don't need anything else other than what I'm telling you. But then again, I'm not telling you anything. I'm just sharing my experience. You guys need to go check, dot the I's, cross the T's yourself to figure out, am I full of it, or is it some validity to what I'm saying? Okay? That being said, Walgreens earnings May. Macy's pay a sweet dividend. That's 2% dividend from Macy's. Miss 103 EPS earnings per share. Okay. Stag. Ooh, Stag is a no, because I'm pretty sure Stag is a monthly optionable stock. Yeah, monthly. Sorry. I don't do monthly optionable stock because there's only 12 months in a year, and I'm only, think of it this way, I'm getting 12 checks, one for each month of the year, because I can do a covered call once per month with this particular stock. Once per month is 12 times a year. Now, if I'm averaging 1%, 1% to 2% for each option I sell, well, here I'd get a maximum of 24% per year. That might be good for some of you guys, but that doesn't work for me. Okay, I need to get a job to add more money to my nest egg in order for me to live off of 25% per year. Okay, I like weekly option. Weekly option, 1% a week is over 50% per year. That's what I like. Stag is a no. I own Dell contracts. Mo, awesome. You do know that it's not a profit until you take it, Mo. So wherever that profit is, it's up to you to take it or not take it. And nobody ever went broke taking profits. Evan, do you see an issue on only focusing on certain industry? Again, okay, you're talking about a certain industry. Okay, nothing wrong with that at all. Now, I don't do that. What I do is I look at the whole stock market as an entirety. Okay, so we take a look at Apple, COP, which is ConocoPhillips. Is that right? No. Yeah, ConocoPhillips. PPG, US Steel. What's four totally separate industries right there? Do I really honestly care? No, I don't. What I do care about? Well, each one of these has consistently increased its dividends. That's what I'm looking for, a profitable company. How can you tell if it's profitable? Well, if they share the profits and they're continuously increasing the profits they're sharing, well, they're continuously profitable. That's why they're on this list. That's my personal list. All right, Circle. Your channel is the best. Thank you. I learned so much. Sadly, in school, college doesn't teach us this at all. Well, because you have to understand what college and school's about. Okay? Now, the current education system that we have in the United States was created by John D. Rockefeller because he had all these businesses. He didn't want people free thinking and making money for themselves. No, he wanted a nation of workers. So school prepares you to be a worker. You got to be in your class by a certain time. The bell rings, great. You get a lunch break, boom, another bell. Okay, lunch is over, boom, another bell. Time to leave, boom, another bell. Then you go home. Then you do the same thing, week after week after week. It's not, the school systems are not designed for entrepreneurs and for people to make money. No, they're designed for workers. Hello, sir, how's it going? Hey, Mary, how are you today? Okay, what's your average, what is your average preferred daily profit you're after? Okay, free to think, to live? I'm pretty sure I said it a bunch of times. Safe, predictable, consistent, 1% per week. I'm not a day trader, okay? I only buy good quality dividend stocks, and I go into it thinking I'm going to buy it and hold it long term. If it just so happens to hit my target and give me a profit, fine, I'll step aside and say, who's next? Because look at it. Kinder Morgan, Citigroup, who's that? Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo. That's this week. Look at the next week. Apple, Capital One, ConocoPhillips, PPG, U.S. Steel, Clorox, Kroger, ExxonMobil, Emerson, Hershey's, RTX, and Walmart. Okay, fine. I like all of those. This right here, CVX is Chevron, UPS, ADM, Archer Daniels, Aflac, Target, and Walgreens. I like all them. And then look what happens at the end of the month. 3M, Johnson & Johnson, Key, Baxter, GLW, Corning, Heinz Ketchup, and Newmont Energy. Okay, I have no problem whatsoever. If I buy one company, get 1%, great. If I buy one company, get 1%, great. If I buy one company, get 1%, great. One company, 1%, great. Well, I just made 1, 2, 3, 4, 5% in 1 month. I got no problem with that whatsoever. They're all good quality companies. But remember, I like the fact that they're consistently profitable. If they have their dividend coming up, okay, 2 weeks before the dividend is where I like to buy. So Johnson & Johnson, the 27th, I like to buy it on the 12th, 2 weeks before, on a Monday. Do a covered call. If it hits my target, great. If it doesn't hit my target, I'll do it again. Okay, got 1% here. I'll do it again, get another 1% here. I'll do it again, get another 1% here, and I'll get the dividend. And if it doesn't hit my target, I'll keep doing it until it does hit my target. '86. I really want to appreciate. I really want to acknowledge, okay, what your interaction, and I appreciate you and the other moderators and the other guys that add to the conversation. It makes my life easier, and by making my life easier, I can go through a lot more examples. So as long as you guys are answering the questions for me, because you guys have been here long enough. What's your website again? The 10-Minute Trader. Where is it? All right. Whoops. The 10-Minute Trader. Okay? Now, if you do a Google search on the 10-Minute Trader and see who's owned it for the last 20 years, me. Okay? Okay, I got Facebook, YouTube, Instagram. You name a social media site, I'm probably on there. All right? I've been here. I've been playing this game long enough. I have nothing to hide. No dishonesty whatsoever. Okay? Let's get back to this. What do you think about credit debt? We already checked that one. Ash, 10-Minute Trader can be found in his bio. That's correct. Thank you. Stocks, but he doesn't discuss here. A burger, that works great on some stocks. But yeah, it's true. I only teach one strategy here. Yes, a compliment I meant. Thank you very much. Is it possible to make a quick buck 30 days without losing principal? Yes, but you're always going to have risk. Okay? Anytime you have money on the line, there's always going to be risk. Now, the way I define risk is going to be different from everyone else. Now, the way I define it, if I'm buying Coca-Cola, I find that to be no risk whatsoever. What do I mean by that? Well, Coca-Cola has been making Coca-Cola for over 100 years. Do you honestly think you can have a memory in your mind somewhere in the past where you've never seen a Coca-Cola? There's Coca-Cola all over the world. Okay, now, when I say no risk, I really don't think Coca-Cola is going to disappear overnight. As big as they are. They're not number one in the United States. They're number one in the world. Okay, so a company like that doesn't just disappear. All right, so there really is no risk there in my humble opinion. I got to throw that word in there, my humble opinion. Could they disappear? Yeah. There could be simultaneous earthquakes all over the world swallowing up every Coca-Cola distribution center and every Coca-Cola manufacturing center. It's possible. If you believe the bullshit that a bullet can stop in midair, turn 90 degrees, pause for 10 seconds, move forward, turn 90 degrees again, cut the angle down a little bit, and then go forward. If you believe that bullshit, yeah, Coca-Cola could disappear overnight. Now, for those of you who don't know what that bullet reference was, that's what they call the magic bullet in the Warren report when it killed Kennedy. The magic bullet. It went through Kennedy, it stopped, it turned again, and it down, and then it hit the guy in front of him. Yeah, that's just stupid. But it got the public believed that bullshit. Do you see an issue with focusing on single industry? No. Just for fun, there are always risks, but one of the rules is never sell at a loss. You're absolutely right. Never sell at a loss. Defeats the purpose. Hey, Brittany, how are you today? I wonder which Brittany that is. Okay, that's that Brittany. Arrow, hello. What tab on the platform do you open up to have exactly like you have it right there? Ooh, excuse me. Holy shit. First of all, there's a bunch of little, what do you call these things? These little arrows. Okay, you click on a little arrow, all these things pop up. Okay? This thing pops up and disappears. Okay, all these little cool arrows go back and forth. All right, moving around. And then up here, you have monitor, trade, analyze, scan, market watch, charts, tools. There's a whole bunch of crap you can look at. Okay, Thinkorswim has so much stuff in it. It's amazing. Okay, now I'm going to have to be 100% honest with you guys. Okay, out of all the stuff on Thinkorswim, I maybe use 1 or 2% of everything on there. I use what I use in my strategy, and that's it. I don't look at anything else because it's confusing as hell. And there's a reason why it's confusing. Because the powers that be don't want the average person. They don't want me and you talking to each other. They don't want people like me sharing with people like you how to make the kind of money that you could make. They want it to be confusing. They want you to go through a trained professional, which in order to get a trained professional, get your certificate, you got to pay the government in order to get that certificate. Okay? That's what they want. And then it's a conspiracy, and I don't want to get into it. All right. Stonks only go up. Yeah, King's Arm. All right. You believe that one. All right. Simone is here. Woohoo! All right, so we're actually at the end of all the questions, so let's start looking at some of the stocks you guys brought up. All right, one more question. Travis Cobart. He shows his trades on his website. He does like 95% and saves some cash back. Well, yeah, kind of like that. Like 98% of all my money's invested at all time. I keep 2% by, just in case I need to buy something. All right, let's go on to the list that you guys have suggested. First one on the list for today is going to be Macy's. We already did Walgreens. Macy's is next. Macy's, here we go. First thing, as always, high, low, where was it, where is it, what direction is it going? Cool beans. Now let's take a look at the numbers. The numbers, 1770. The closest strike price to 1770 is two of them. The 1750 and the 18. Okay, because they're both close to it. One's in the money and one's at the money. Okay, so the 18 is paying 64 cents a share. That's a nice return. What is that? Now, I can almost guarantee with 100% certainty, the numbers here, they're not going to be the same tomorrow morning. Because when the market opens, all these numbers change. But the math in the math and the equation doesn't change. Okay? Here's your last traded price. Here's your bid. Here's your ask. The ask is the price I'm going to pay first thing tomorrow morning. Okay, at 1780, the closest strike price, the 18, is 64 cents. Okay, so let's do the math. Get out your calculator. Clear that. First thing you want to do is take your profit. All right, if I'm going to buy it at that, sell it at this, I'm going to make 64 cents per share. All right, so 64 cents per share. Divide that by the purchase price. The current purchase price at this moment is $17.70. $17.70 gives me a grand total of 3.6%. 3.6%. Well, that's nice. But the stock has to go up to 18 in order for me to get that, which means it has to go up 30 cents. Now, 30 cents on a $17 stock is just shy of 20% increase. Could it happen? Yeah. Will it? Don't know. We'll see. Let's take a look at the numbers and see what it looks like. But before we do that, let's take a look at one strike in the money, the 1750. Because the 1750, the stock doesn't have to move at all. If the stock goes up, I make the money. Great. Stock stays the exact same, I make the money. Stock can even come down 20 cents and I'll still be making the money. That's my favorite because you're going to win, win, and win. All right, so let's take a look at the numbers at the 1750. So the 1750 strike price at this moment in time is going for 50 cents a share. All right, now at 1750 strike price, if I'm buying it at 1770 and selling at 1750, well, I'm losing 20%, 20 cents. That 20 cents is going to come from somewhere. So we take our 50 cents profit and we're going to subtract the 20 cents that we're losing, and we end up walking away with 30 cents per share. Now I know 30 cents per share is not a lot, but divide that by the purchase price, 1750. Why not 1770? Well, because I already subtracted the 20 cents out of the equation. No sense in putting it back in. Okay? So, clear that. Hold on a second. So, 30 cents divided by the strike price, 1750, because that's what I'm selling it for, I'm going to get a return of 1.7% per week. Well, that's a lot different than 3.5%, but here's the thing. At 1750, the current stock price right now is 1770. The stock doesn't have to do a damn thing. I'm still walking away with 1.7. Now, 1.7 over the year, well, let's find out. Times 52, because there's 52 weeks in a year, that's 89% for the year. Well, I can live with 89% for the year, but let's go back for a second. All right? So, hypothetically speaking, right, the 1750 is going to give you 1.7%. Okay, the 18 is going to give you 3.5%. Which one do you go with? Well, that's all going to depend on your risk factor. All right? If you like Macy's, great. If you think it could hit 18 by next Friday, great. Let's take a look at the chart. Remember, first thing, high, low, where was it? Where is it? A year ago, it was at 1536. It bottomed out in November, the beginning of November, at 1061. The top of the year was 2210, and that was the middle of March. Well, look at the last 90 days. Okay? Up, down, up, down, up, down, up, down, up, down, up, down. Big drop. Up, down. Now she's going up to the upside. All right, well, what's the last 30 days look like? The last 30 days would be right about there. Okay? Totally different picture, isn't it? Okay, here it was 30 days ago, 1650. You shoots up to 1750, drops all the way down to 1450, comes up to 16, and then it shoots up to 1770. There's your new 30-day high, Friday. Do I want to jump in this? Hell no, because it's at a 30-day high. I do not buy at a high waiting for it to go higher. You're going to make your money in the stock market buying at the bottom and then taking it up. Okay, but do you want to isolate the bottom? Because where is the bottom? I like 2 days to the upside. Here's the 30-day bottom, 2 days to the upside. That's where I want to jump in and then take it up. After the 30-day bottom has been isolated. Because the stock goes down, let me back this up for a little bit. Okay, right there. What does that tell you? It doesn't tell you a damn thing. It tells you the bottom is right there. Well, is that the bottom? No, because the next day it's going to be higher or low. It's a 50-50 shot. Do I want to buy there? No, I do not. Because I don't know if it's going to go any lower. James, on Macy's, then why not trade the 1650 options? All right, Mary, let me just 1 second, and I will do the numbers on the 1650, and I'll let you know, okay? But I always like 2 days to the upside before I jump in. So let's go 1 day forward. Okay? It's still, I like 2 days to the upside to isolate a 30-day bottom because you still could come back down again. right? Next day, 2 days to the upside. This is not really an up day because it's a down day, it's all red. Well, there's 3 days, 4 days, 5 days, and then it keeps on going. I like 2 days to the upside to isolate a 30-day bottom. So Mary asked, why don't I do the 1650? Well, let's look at the 1650. The 1650 is offering $1.56. So the easiest way to do this is you take the 1650, you add the premium to it, which is 156, and that gives you an $18.06 sale price. Okay, so that's what your sale price is. So if you sell the 1650, you're actually walking away with 1806. So let's subtract the 1770 from that, because that's the current price, and that will give us our profit. Our profit is 36 cents. Okay, 36 cents on a $17 stock divided by 1770. It's 2%. Well, I like that one better than 17, the 1650, because it's always about the numbers. Okay, always, always, always about the numbers. How much you invested, how much you get in return, what is your rate of return, how much is the stock, well, where's the top, where's the bottom, what direction it's going. All these questions, they're really not that difficult if you take them one at a time. Now, when I say the 10-minute trader, well, let me show you a couple of trades and show you how quick it really should be. How do you pick a time frame on deciding which date to buy? Stifler's mom, dude, I haven't heard from you in a couple of weeks. I'm good with names, I am. Now you were coming here for a couple of weeks and then you disappeared, and now you're here again. How do I decide on the time frame when deciding which date to buy? Well, that's easy. I buy on a Monday and I want to be out on a Friday. So I go from Monday to Friday, Monday to Friday, Monday to Friday. When I say weekly cash flow, I mean every single week. I don't buy it today and sell an option 2 or 3 weeks down the line. No, I don't do that. Weekly, every single week. Okay, I don't know about you, but growing up, I was required to go to work every Monday, and I get a paycheck every Friday. This is kind of the same thing, for me anyway. All right. Well, let's see what else we got. So it's always about the numbers. What are you buying for? What strike price are you selling? What premium are you collecting? What is the profit going to be? And then you just do the numbers. Is it going to be worth your while or is it not? All right, here's your 30-day top. Here's your 30-day bottom. It's going to the upside and it's going to continue going up until we, you and me, decide, all right, that's enough. It's too high, no more. Okay, but Macy's, as you see where it is right now, that's the new 30-day high. More than likely, there's going to be profit taken come Monday. You got a gap up right here, and then she just keeps on going. Well, what do you think is going to happen on Monday? Well, from this 30-day bottom to this 30-day top, you get a whole bunch of people just like me saying, ooh, that's a profit, let me take it. Because the funny thing about profits, it ain't a profit until you take it. And nobody ever went broke taking profits. Okay, I'm liking it, my man. Stifler's mom, all right. Divvy Dave, when are your shirts going to be available? You know, we were talking about that this weekend because I get a lot of comments on it, and it's like a lot of people want to buy them. And it's really not that difficult. I just got to add a link to my website if I knew how to do that. Okay? From what you guys are seeing, it took me a while to figure it out. Target, can you check? Looks very juicy premium. Target always has good premiums. Now, Target was one of those companies I lost money on last year. I bought it at 135. That sucker went down to 102. I held it and I continued getting premiums. But then when this happened right here, hold on. Okay, I bought it in July at 135. And as it slowly dropped to 102, I didn't have to look at the number because I lived it and I knew what it was. That 102 was the bottom. Then we get on over to here to the 13th of November. Then on the 14th of November, you get this right here. And this is what they call a black swan. This thing jumped 16 points in one day. Overnight. All right? Overnight, jumped 16 points. I lost 12,000 bucks. Overnight. I had no choice in the matter. Lose 60, lose 12,000, 15,000, something like that, or lose 25. Yeah, that wasn't happening. So why not just buy and sell Ford and GM calls over and over and over again? Why change stocks every week? Well, it's a silly question, but let's go ahead and take a look at it. Okay, let's get rid of that. All right, first of all, Ford and GM pay a dividend once every 90 days. So you have 90 days, you buy one stock and you have to wait 90 days to buy the next one. Okay? Why would I want to do that? If I buy Kinder Morgan and I get 1% from that, great. Now I can buy Citigroup, get 1% from that. Now I can buy Clorox, get 1% from that. If you're talking just getting 1% from Ford and General Motors, well, let's take a gander at that. Ford, here's Ford at the current moment in time. Here's your high of the year, and here's your bottom. It looks a nice run up, okay? Big drop, that's gonna fill eventually. That's an awesome buying opportunity. But you know what sucks about that buying opportunity? Take a look at this. 1051, the closest strike price is gonna be the 1050. What are you bringing in? 15 cents. That's like 1.5%. Question, when Monday comes, when Monday comes, how do you determine the percentage gain right at open? Are you doing pre-calculations? No. Because pre-market, they don't have because these numbers don't appear until the market opens. Okay, once the market opens, all these numbers change. But the equation stays the same. If I'm buying it here and I'm selling it here, this is what I'm collecting. If this is my profit, what percentage is this of that? That's the math equation is always the same. The numbers change, but they're usually right around the same area. They don't change that much. IBM, huh, Dennis? IBM. I like IBM. We'll take a look at it in a minute. All right. Miss Simone wants me to explain how I lost money in Target. All right. It doesn't go back further than where we are at the moment. Okay? But take it when I tell you. A year ago today, it was at 131. Well, in mid-July of last year, it was at 135. I bought it at 135. And as the weeks progressed, it slowly went down to the bottom of the year in October, down to 102. So it went from 135 to 102. And as the stock drops, I'm slowly selling covered calls against it, lower and lower and lower. Now here it was going sideways for a bit, and then here, the week of November 13th. Okay, here's the Monday right there at 108. I was selling, I believe, the 112s. Okay, so here's Monday right here. Okay, I was selling the 112s. Remember, I bought it at 135, but the stock was so low, I was selling the 112s and still bringing in a premium. What happened the very next day? It went from 111 all the way up to 128. It jumped $16. Now the option I sold, I believe I got somewhere around 50 cents for it. Okay, fine, 50 cents, not bad. However, when it jumped $16, that 50-cent option is now worth $15. And I have to buy it back at $15. And 1,000 shares at 10 contracts at $15, that's $15,000. Since you said the trade right at the market, okay, hold on a second. Take a couple of these questions you just asked. Question, when Monday comes, okay. If you picked a stock for Monday and right at the market open it jumps, so you go in anyway and you do determine the point of trade, blah, 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 blah. Since you said you trade right at the market open, please explain. Alrighty then. Now, when the market opens, if you have an order open, okay, before like the market opens at 9:30. So if you put your order in, let's say at 9 o'clock or 8:15 or the day before, whatever. But if you have an order sitting on the books when the market opens. Okay, if the market opens up here, well, that's your entry price. Okay, and you sell the covered call against it, you get whatever that covered call is going to be. So if I buy it and I sell it, yeah, that's what I'm going to get filled at. This is all that means. You don't have very much of a choice when the market opens it. Now, if I wait until after the bell, yeah, things will be different. But the math is still the same. Okay, you're still buying it at a certain price, selling at a certain price, collecting a certain premium, and that premium is a certain rate of return, however it is, however it works for you. All right, let's take a quick look at IBM. Oh, wait a minute, someone want to take a look at Target. Okay, so that's Target. Where are we now with Target? Okay, always right, but that means you can make a wrong decision. Absolutely correct. That's why I say always make sure you're okay with buying the stock at the price you're buying it for. If I decide to put my order in before the market opens, well, then I take full responsibility for doing that. If she gaps up and I get stuck with something I didn't want at a price I didn't want, well, that's my own damn fault. I take full responsibility for it. So you should wait after market open. Not necessarily so. That's not what I said. I said sometimes I put the orders in before the market opens. Sometimes I wait until after the market opens. It all depends on the numbers, and that all depends on, well, Monday morning. What am I looking at? Okay, whatever I'm looking at, I make my decision. Am I going to buy it before the market opens? Am I going to put my order before it opens, or wait until after it opens? It's all a personal choice. All right. If I could go back, I would have studied finance and accounting. Okay. But Mike, okay, now, not everybody knows your backstory, Michael David Robinson. You're a pilot. You got a shit ton of money. You got a nice little spread. You got a nice little toy collection. And you fly all over the world. That's a lovely job, a lovely situation you're in. Okay, why you continue working is beyond me. Feline, sorry, but that makes no sense. No stock opens at the same price. So, all right, someone wants to say this. Open the same price, so no matter what, if you pre-order, you will still not get what you calculate you hope to get. You're absolutely 100% correct. I'm not arguing with you. What I'm saying is, if I put an order in, when I put my orders in, for the most part, if I'm doing a covered call, let's do one. Okay, let's do one for the moment, and I'll show you. Okay, so at this moment in time, target is at 144.19. The 144s are going for 550. That's a nice freaking premium. Well, let's take a look. There's our high, there's our low, that's where it was, this is where it is. Last 30 days looks something like this. Check that out. 30 days ago was the 30-day high. Got a gap down here, a gap down here, a gap up here. Well, gaps have a tendency to fill. Well, this one already filled. This is the next one coming after. So it's here. What are the chances are it's going to continue going up to challenge that 30-day high? Well, it's a pretty good idea. So let's say hypothetically, I like the 144s. All right, so first thing I want to do is I want to change it from a single order to a covered call order. And like I said, I like the 144s. Here's the 144s right there. And it automatically fills. Okay, it automatically fills to my preset. My preset is 1,000 shares and 10 contracts. Hold on. That was a response to Michelle. Yes, I would still be a pilot thing though. Okay, I get it, Michael. Not a bad. Okay, so here's the pre-filled order. Buy 1,000 shares, sell 10 contracts. Remember, for each contract, you have to have 100 shares. 1,000 shares, 10 contracts. 500 shares, 5 contracts. Okay? I want to change it from a limit order to a market order. So, see that, Miss Feline? A market order. That's what I like to fill. Now, when I do a market order, that means it will fill first thing in the morning. Now, this market order is buying target at the market. It's also selling the 23 August 24, that's next Friday's strike price at 144 at the market. So if it fills at the market, that's what I'm getting. Now, if she gaps up, more than likely that order won't fill because they're tied together. So if she gaps up to 150, yeah, the order will just get canceled. Or I can sit there and wait for it to open. But let's continue. Hit confirm and send. First thing I want to see is the order right there. Buy 10 covered TGT, which is target 100. Those are the weeklies. 23 August 24. That's next Friday. The $44 call strike and target and the stock. So I'm buying the stock and I'm selling the option. At the market to open to open. Why does it say to open to open? Because it's two orders. Stocks mainly traded in New York. Options mainly traded in Chicago Board of Options Exchange. Okay, two orders. You're opening up a stock order and you're opening up an options order. My break even, very important number, 138.46. Well, if the current stock price is 144 and my break even is 138.46, well, I have a lot of room to make a profit. Okay? Anything above 138.46 is profit. The maximum profit on this trade, 5,500. What is it costing me? 138. So if I change it to 100 shares, it'll be different, but the percentages will still be the same. Grab out my calculator, clear this entry, take the profit, 55.35 divided by the purchase price, 138.471. It gives me a total return of 3.9%. That's a nice premium for 1 week if the stock stays above 144. Now, let's go back to the chart for a second. Okay. Here's where the stock is at this moment in time. Okay? 144.04. Tomorrow morning, she could go open up higher. She could open up lower. Okay? If she opens up higher or lower, my order may or may not get filled. Okay, what did Miss Feline have to say? Sorry, we'll have to agree to disagree, since pre-market is already moving the stock away from before the price. Yeah, I get that. So we will never be able to calculate the gain at that moment. All right, I'm going to agree with you 100%. Okay, what I am saying that you're disregarding is currently at this moment in time. Let's change this back. Currently, at this moment in time, I'm working with the numbers that I have. The number that I have, here's the purchase price. The number that I have, here is the strike price. The strike price is going for this price right now. At this current moment in time, divide this by that and you come up with your rate of return. Now, as soon as the market opens, all of these numbers are going to change. It's kind of like a roulette wheel. You spin it, and it goes click, 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 boom, until you push the button. By now, you're on a roulette wheel. More than likely, it's going to be somewhere in between where you buy it, where you sell it, and what you make. It's constantly moving. You're throwing a dart at a target on a moving train on a horse blindfolded. I got that from Star Trek. Okay, so basically, it's a shot in the dark, but it's usually right around the same amount. Okay, so when it opens up, you can have your bid and your ask. And your bid and the ask is usually anywhere between 2 to 5 cents between the bid and the ask. And then between that price and that price, then you come over here. And then you can always incorporate the Black-Scholes pricing methods for options. That's complicated as hell. When I created it for my daughter, if you're buying it at this and you're selling it at this, you're making this, how much is it? It's more than 1%? Fine, great. That's it. Okay, I see what you're saying. So it won't fill then. Last thing, since the stock market the order will go through separately. Basically, yes. Now, if I do a limit order, it will hit my limit order. If I do a market order, it will do it at the market order. Okay? All right. Keep going. A couple more questions. All right. Davy Dave, that was interesting learning that I would have to pay the difference if the stock jumps up. Yeah. Okay, anytime you sell an option, strike price below the stock price that you purchased it at. If I purchase this at 144, okay, and I sell the 138s, I have to come up with a difference. Okay? So I like to tell people always do the simplest. Simple, safe, predictable, and consistent. If I'm buying it at this price, selling it at that price, this is what I should collect. If that's more than 1%, great. What are the charts telling me? Are the charts telling me it's a good time to buy, or is the charts telling me I should wait? Okay, it's really not that difficult because you can take almost any stock. DuPont. Okay, first thing I want to say. High, low, where was it, where is it? Here it is right there, 80, 48. The 80 is going for 75 cents, not 1%. No, thank you. I like DuPont. Not this week, though. Simple, right? Let's take a look at another one. GE, General Electric. Simple again. High, low, where was it, where is it, what direction it's going? It's going to be a no because it's too close to the high, but let's take a look at the numbers. 169.59, the 170s, 202. It is giving me over 1%, but look where it is. I don't like buying it way up that high. So then, it's probably best to just do limit order. That way you don't get into the trade. Okay, you know, it's different for everyone. Okay, when I'm getting into a new trade, I always do a covered call market order because that way the stock and the option are tied together and I already know what I'm making. Okay, now if I already own a stock, yeah, I won't sell a call at the market. I'll sell a call at a limit order because I want to know exactly, because I don't trust those guys. I don't. Okay, so as a calendar, as a covered stock, the option is already calculated in 169. Look at the 170s. 170s right here. Okay. Okay. As a covered call, buying and selling at the exact same time, my profit is already calculated in. They're already tied together. So I'm buying them as, I'm buying them in one trade rather than two separate trades. Because if I buy the stock, wait a little bit, and then sell the option, well, I don't know when my price is going to be. I'm just simple, okay? If it's my 1%, great. Thank you very much. Have a nice day. Let's move on to the next thing on my agenda for the day. I don't want to sit in front of the computer all day. All right, let's get rid of this. Let's get rid of that. Let's go back to this. Let's go back to that. All right, so I'm done with all the questions. Did you already look at Kohl's for tomorrow? Let's look at Kohl's right now, because I believe Kohl's is next on the list. Kohl's, Starbucks, and Valero coming right up. Kohl's, KSS. And I actually do own some Kohl's. KSS. Now, Kohl's. I've got Kohl's at 2050. All right, and I've already 816. 816, that should have already expired. Huh, that's interesting. All right, so I already have some Kohl's in that account, and nope, just that one. All right, let's take a look at Kohl's. First thing I want to see, as always, high, low, where was it, where is it, what direction is it going? It's at 2045 at the moment. I can buy it at 2065. The 2050 is going for 52 cents. That's over 2%. Great, that works for me. I don't have to know the exact amount. It's over 1%. That's what I'm looking for. A year ago, Kohl's was at 27.46. The bottom of the year was a double bottom, 17.71. And it looks like we have a triple top at 29.55. Twice in December and once in April. Then from there, she just falls from grace. A lot of movement. Look at the last 90 days. Okay, here's the last 90 days. Look at the movement. She gaps down. Comes up, pulls back, up, down, up, down, up, down, up, down, up, down. Now she's going to the upside. Here's where she is now. Your 30-day top, well, let's go into the 30 days, because that's 90 days. That looks a little bit different. But look how crisp and clear it is. Down, up, down, up, down, up. Well, now she's going to the upside. Great. I like Kohl's at this price. It is Kohl's on my list for tomorrow. Yeah, Kohl's is on my list for tomorrow. Oh, there you go. Now, if I'm looking at Kohl's right now, if I'm looking at Kohl's right now, the current stock price is $20.65. Well, the closest strike price is going to be the $20.50. If I'm losing 15 cents off the top, I reduce it from here, I'm still getting over 1%. That's what I'm looking for. 1% or more every single week, week after week after week. Do you already, okay. So that being said, let's take a look at the seasonality. See what Kohl's usually does this time of year. Now, here's the seasonality chart right here. Here's the last, okay, this is this year. That's the average 20. And look, just going sideways for the next couple of weeks. Okay? Historically speaking, she doesn't move a lot. All right? Not this time. Look at this time of year, she just goes sideways, which I'm good with that. I like Kohl's. I like Kohl's at this number. And this number is going to give me more than 1%. What does it have to do? Basically, not a whole heck of a lot of anything. All right, the August 30 calls pay 15 cents more. Let me go back to where I was. Okay, so right now the 2050 is going for 52 cents. The 30, which is 2 weeks away, is going for $1.31. Well, again, it always comes down to the math. If you want to jump in and do a 2-week call, fine, great, same thing. You're paying at $20.65. The 2050 is going for $1.39, $1.31. Take your 15 cents off of that. Now you're making $1.15. $1.15 on $20 stock. That's almost 5%. Okay, but you got to hold it for 2 weeks. Well, great. 2 weeks. Where does it look like this is going to be in 2 weeks? 1, 2. Yeah, it should be somewhere up there. If not, it should go up and then she can pull back a little bit. But are you okay with buying Kohl's at this price, knowing that there's a possibility it could go down? Because you're going to buy a stock, it's going to go up, guaranteed. You're also going to buy a stock, it's going to go down, guaranteed. They go up, they go down. That's all they do. Seriously. Have you ever seen a stock done anything else other than go up or down? No, because that's all they do. You're going to jump in tomorrow and it's going to go down. You're going to jump in tomorrow and it's going to go up. That's exactly what they do. Where you jump in, that's an important thing. Where you jump out, that's another important thing. Travis, if you pick a strike price in the money, does it fill quickly or does it still take until Friday? All right, Travis, the interesting thing about stock options, okay? I don't know if anyone ever told you this, but if you buy, let me get this out of here so it clears it up a little bit. Okay, if I buy it tomorrow morning at $20.65, right? If I sell the 2050s, well, that's 15 cents in the money already. So if the stock goes up, I make my money. Stock stays the same, I make my money. Stock can even come down and I'll still make some money as long as it doesn't drop below the 2050 what I sold. Now, if you go further in the money, if you do the 1950, the risk of doing it at 1950, when you sell the option, the person you sell it to can exercise their option at any time they want. They do not have to wait until Friday. But here's the thing. If you buy it here and you sell the 1950, whoever buys it from you is paying $1.24. So you have to take this into consideration. So whoever's buying it from you at $1.24, well, they're going to want to recoup their purchase, which means they're not going to want to sell it and get $1.34. They're going to want to get more. Most buyers. There's a huge difference in mental thinking when it comes to option buyers and option sellers. I'm an option seller. I want to sell this right here, and I want to see this go to 0. That's what I want. Now, as an option buyer, they want to buy this right here, and they want to see it double, triple, quadruple. Huge difference. Me, if I buy this and I sell this, well, there's my 1% already guaranteed. Do I care where the stock goes? No, because I like the stock. Remember, rule number 1, never buy something you do not want to hold long term or you don't understand. I got no problems buying Kohl's and holding on to it. If I can get 1% every single week from Kohl's, well, of course I'll do it. Okay? If you take a look at my stock list, my stock purchases. Come on. Take a look at my stock purchases and see how often I bought Kohl's and Macy's this year. Let's go. Here we go. Week number 1. Macy's. Week number 2. Oops, that's still week number 1. Week number 2. Macy's. Week number 3. So here, Macy's. Week 4, Macy's. Week 5, Macy's. Week 6, Macy's. Week 7, Macy's. Week 8, Macy's. Week 9, Macy's. Week 10, Macy's. Why? I keep buying Macy's. Look, 1937, I sold off the 1950s for 86 cents. Well, that's more than 1%. That's why I continue buying Macy's, because it continuously gives me more than 1% every single week. So if you take a look at my history, how many times I bought Macy's this year, well, Macy's is my biggest winner this year. Even though the stock keeps going down, do I care? No, because I like Macy's. They've been around for over 100 years. I really don't see them disappearing. Mera. Ooh. Hey, Hakuna, we haven't seen you in the past couple of days. This seems so hard and time consuming. Daisy Poppy, how are you today? Now, Daisy Poppy, it sounds confusing because it's new. Okay, that's one. Okay, number 2, it sounds confusing because the people or the powers that be want you to think it's confusing. Now, I can show you that it's really not that confusing at all. Let me give you an example. Now, this question is going to be for Daisy specifically, nobody else. Okay, Daisy Poppy, you ready for this? Now, I'm going to rattle off a couple of companies, and you tell me which one you've never heard of, okay? This is Warren Buffett's list. Ally Bank, Aon, Siri, Visa, Wells Fargo, Moody's, Heinrich and Payne, Kroger, Capital One Finance, Apple, Chevron, Jeffries, UPS, Louisiana Pacific, Johnson & Johnson, Kraft Heinz, T-Mobile. Have you heard of all of those? There's probably 1 or 2 you probably haven't heard of. Okay, because seriously, I've never heard of DHI. I have no idea who they are. And AON. I have no idea who they are also. But you know what? If it's on Warren Buffett's list, well, that's good enough for me. Kind of cheating, but it's good enough for me. Okay? So you know all these companies. You've heard of them before. So let's take a look at Apple for a second. Because I know you've heard of Apple. Apple, AAPL. Okay. Okay, so here's Apple, the stock. Okay, you've heard of them. At this moment in time, the current price is right here at $226. All right? If I buy it at $226, sell it at $225, I'm bringing in $3.10 a share. That's over 1%. If I buy it, I sell someone the rights to buy it from me for the same price I paid for it. They're giving me 1% per week. Where's my risk? Well, your risk is Apple could close up shop and go bankrupt next week. I really don't see that happening, but it's a possibility. Okay? Okay, there could be an earthquake where the earth opens up and swallows up Apple headquarters and all the other Apple stores that go along with it. It's a possibility. If you believe the magic bullet theory, you probably believe that too. Okay, I don't see Apple going out of business. I don't see General Motors going out of business. I don't see Ford going out of business. General Electric, Home Depot, Lowe's, those companies I consider to be a safe investment because they've been around for so long and they're so huge, it doesn't look like they're just going to disappear. That I don't see the risk. And you still haven't answered my question. one or two in the beginning. Yeah, same with me. I don't know who Aon Bank is, and I have no idea who DHI is. But if it's on Warren Buffett's list, then it's okay for me. Now, I'm going to make the assumption that you understand simple math. If I'm buying it at this price here, and I'm selling this here, and this is my profit, okay, that's over 1%. What does the stock have to do? It doesn't have to do anything. It just stay right where it is. Because right now, it's at 226. If I'm selling the 225s, all it has to do is stay at 225 or higher. And then I get my 1% or more. Okay, if it doesn't go through, well, then I keep it and I do it next week. And then I do it the week after, and I keep getting 1% every single week. Never buy something you don't understand. Okay, if you don't understand Apple, don't buy it. If you don't understand General Electric, don't buy it. At some point in time, you have to do something with your money, whether you give it to a money manager and let them take care of it for you, or you do it yourself. Okay? You don't, it's not a sprint. It's a marathon. So however old you are now to the date you decide to retire, even after that, either you take responsibility for your money or you give it to someone else. And when you give it to someone else, well, you get whatever they give you. Okay? So if you have questions, hey, put your number in the DM and I will give you a call. I'll walk you through it. This is not for everyone. This is slow. This is boring. Okay, this is monotonous. It's the same thing over and over and over again. There's 13 weeks in a quarter. So week number 1 of the first quarter looks basically the same as week number 1 of the second quarter, which looks very strangely similar to week number 1 of the third quarter and week number 1 of the fourth quarter. And guess what happens after that? Well, week number 1 of the first quarter of next year starts all over again. It's the same stocks over and over and over again because they're consistently profitable. And those are the only ones that I personally look at. Safe, predictable, consistent 1% per week. That's my goal. Okay? If it's confusing for you, just slow down. Don't be in a hurry. The stock market has been around for 400 years. The first dividend stock was sold in 1602. Okay? It came here to the United States, I believe, in 1777, I believe, or 1787, one of those. But it's been here for a while. It's not going anywhere because you have people, millions of people out there, all want to start their own business. Great, start your own business. Well, you're going to need money to do that. Well, I don't have any money. Hey, buddy, can I borrow some money? Great. What are you going to give me? I'm going to give you a portion of the profits. Great. That's what I'm looking for. People or companies that give portions of the profit back to the investors. If I'm the investor, I want a weekly cash flow. That's it. Don't make it more confusing than it needs to be. If you're here on this channel right now, well, then you're over the age of 18. This was created for a 9-year-old. Okay? Now, I love my daughter tremendously.
As you being part of my internet website club thingy, which my dad doesn't let me call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks.
Okay, that's my little princess. Let's go with the oldest here. Let's see another one.
Hi, I'm JC, and I'm a 10-minute trader. In less than 3 minutes, I'm going to teach you how to make more than the average bear. There are 5 keys. Key number 1, there are 156 companies paying over 10% yield this year. There are 250 trading days in a year.
So that's my daughter. That's who it was created for. Not a Mensa student, not a honors math student, just an average, everyday little girl. She had band class, she had friends, she did marching band, she twirled the flag, all that kind of nice, neat stuff. She didn't get any scholarships to anything. Just an average, everyday girl. It was created specifically for her. Simple, safe, predictable, consistent, and no way that she could lose. That's what it was created specifically for her. Okay, rule number 1, never buy something you do not understand. If you don't understand it, if you don't know what it is, they grow up so fast. Yes, Dennis, they do. She's 25, living with someone else, thinking of getting married. Like, oh, come on, this is my daughter we're talking about. I'm not ready. I wasn't ready to be a grandfather. I wasn't. Who the hell would make me a grandfather? Purposely. I'm a big child. I am. I will get out in the grass and run around and roll around in the grass with my grandson. It's fun. Everyone thinks I'm a child. Say, Jimmy, you're so immature. Yeah, so I pay my bills. I take responsibility for I take accountability for all my good decisions and bad decisions. I don't owe anyone anything. So yeah, if I want to be an adolescent and act like a child with my grandson, that's my right. Anyway, besides the point. You know more than you think you know. Don't get bogged down with terminology. If you're a little unsure, stop what you're doing and ask a question. Okay? Okay, I'm sure when it came time to tie your shoe, you didn't get it on the first try. Riding a bike, you probably didn't get that the first try either. Driving a stick shift, you want me to do this, and you want me to keep, yeah, it's overwhelming. Anything new is going to be overwhelming at first. Take it one step at a time. Find a good company. When I say a good company, I'm talking a good company, one that you know, when you understand. Okay, if you know Apple, great, put it on your list. If you know Macy's, fine, put it on your list. Kohl's, General Electric, Estee Lauder, Ford, Home Depot, Lowe's. If you understand those, put them on your list. Oh, you have a beautiful baby daughter. She's not a baby anymore. She's the same height as me. You know? And it's like, oh, and she's her own person. And she's very opinionated. She tells me when she's upset with me. She tells me when I'm doing things. She has, yeah. So she's different than the boys. And the boys are different. I can take them outside and beat the piss out of them. I can't do that to her. Thank you there, Miss Daisy Poppy. But seriously, if you want help, you want to ask some questions, and I'm totally serious, DM me with your phone number. I'll give you a call. The funny thing is, it's like thousands of people come through here every night, and I'll see that over and over again. But 1, 2, maybe, I think 3 is the most I've ever gotten in one day. Call 3 people one day. I have no problem talking to people. I go to the grocery stores to interact with people because I like talking to people. All right, anyway. Holy cow, we're at 11:30 and we haven't done hardly anything. All right, next stock on the list, Starbucks. Ooh. Okay, I got bought out of my Starbucks. I've had Starbucks for weeks and weeks. When they made that big drop, finally got bought out because she jumped up so quick. So let's take a look at Starbucks, SUBX. Okay. Now, hey, Lucky Larry's here. How you doing there, Larry? Let's go over the numbers for Starbucks. High, low, where was it, where is it, what direction is it going? The direction at this moment in time is anyone's guess. Okay? But let's keep going on. Being a grandfather is the best. Yes, it is. Me and my grandson, we'd hang out, and I'd give him cake and ice cream for breakfast. My daughter-in-law hates it, you know? And we'll have, I remember one day he came over, we had cake and ice cream for breakfast. We had popsicles and chocolate for lunch. We went swimming in the pool. I gave him a Coca-Cola, and I sent him back home. She loves me. My daughter-in-law loves me. Anyway, Starbucks. Here we are right now. If I want to buy it tomorrow morning, $94.99. That's the current price. Now, we all know when the market opens tomorrow morning, all of this is going to change. But the arithmetic is the exact same. If this is my purchase price, I want the closest strike price. The closest strike price. Once I find the closest strike price, what can I get for it? Is that going to be 1% that I'm looking for the week? And if it is, great. Now I want to take a look at the chart. What is the chart telling me? Well, the chart's telling me hell no to Starbucks tomorrow. Okay? Reason being, let's take a look. A year ago, it was at 97. The high of the year, 107, and that was back in the middle of November of last year. Well, let's take a look. Okay, now here's where I jumped in. I jumped in right here before this big drop. Did I know the drop was coming? Hell no. They call that a black swan. Nobody ever knows when a black swan pops up. They just show up. And then you got to deal with it. Great. So I got in at 88. It drops down to here to 74. Wait, I wait a few more days because you know me. I like, let's zoom into it so you can get a better look at it. Okay, so here's the big drop right here. Okay, is that the bottom? No, it kept on going down, 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 down. Now, is this the bottom? Well, we didn't know at that time. because I like 2 days to the upside. Here's one, here's two. This is where I jumped in so I could dollar cost average down. So originally bought for 88. I bought some more at 70 something, so my dollar cost average was somewhere around 83. All right, and then just recently, this thing happened. Is that right? Yeah. Okay, so this thing happened just last week, last Tuesday, as a matter of fact. Okay, so we're here, going sideways for a little bit, and then she just shoots up like a bat out of hell. Remember that meatloaf? Like a bat out of hell. So yeah, all my stocks got bought out. Now I got my premium, okay? And I was only looking for the 1%. So down here, I sell my premium, I sell my option, I get my 1%, and whoever bought it, they made a nice big fat chunk of change. What did I get? I got my 1%. That's all I was looking for. Now, do I quibble about this right here? Do I get upset about it? No, I don't. Because I've been playing the game long enough to know that's going to happen often. Okay, I buy my stock, I get my goal. That is my goal. Once I get my goal, I honestly really don't care what happens after that. It shot up. Why aren't I getting back into it? Well, because it has profit taking all over it. That means eventually people are going to sell it and say, hey, I bought this bad boy at 74, now it's at 94. That's a $20 increase. $20 increase on a $70 stock. Well, that is a little over 30, close to 30%. Is that right? $20, $70. Anyway, besides the point. Was your strike price above the buy when it got sold off? Yes, it was, Julie. I made money off of that. I didn't lose any money on my Starbucks. So, let's continue. Where was I? Oh. Where was I? It's 11:18. Oh, so we have a few more to take a look at. Awesome. Thanks, Miss Julie. All right. Let's move on to the next one. Next one, VLO, Valero Energy. VLO. Somebody wanted to take a look at VLO. All right, so VLO, always, 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 first thing. Okay, we're looking at Valero, VLO. First thing I want to see, the high, the low, where was it, where is it, what direction is it going? Great. Now, it's not at a high and it's not at a low. What am I buying it for? $150.10. The $150.10 per share. The 150 is going for $210. I'm losing 10 cents off the top, so I'm walking away with $2.10 per share. Well, that's over 1%. Great. Well, what do I want to look at now? Well, I want to look at a year ago, 131.25. We have a bottomed out at 119 back in the beginning of November, topped out at 184, almost 185 in the beginning of April. But from there, she just drops. Look at that movement. Down, up, 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 down. This looks like she's changing back to the upside. That's what I like. I like predictable movements. Predictable movements shows me that I can make a decent 1% per week. So let's take a look at the numbers. Last 30 days. Okay, take a look at that. Last 30 days. Here we are at 148. She drops down to 144, shoots up to 168, drops down to 141, up, pulls back, no, right here. I like 2 days to the upside. Here's the bottom, 1, 2, those are both higher than this one. Okay, I still would wait till Monday to find out what the next day is going to be. All right, but still, it's over 1%. I like the company. Win, looking good for tomorrow. Well, I've had Win for the past 3 or 4 months. What do you think about RR? I've never even heard of RR, and if I've never heard of it, it's usually a no. Okay? No options, and it's below it's below $1. I can almost guarantee with 100% certainty it doesn't have 20 years of increased dividends. I really don't care what they do. Okay? Brandon, right? Honestly don't care what they do. Oil tends to down this time of the year. Yep, you're absolutely right, it does. But Rich, what is it? Brandon, the reason why I don't care, okay, now it could be the next best thing since sliced bread. I'm sure you're not old enough to remember that, but still, you may have heard the expression. Now, I'm not in a position to take 5,000, 10,000, 20,000, dump it into this company and wait for it to go up. Wait for it to go up to where? At what point do I get out? I have no idea where they're going. I have no idea who they are. Never heard of them before. A new industry. Yeah, no, and no thanks. Okay? I like safe, predictable, and consistent. 1% per week. I can't do that with a company that has no history. Daryl wants to take a look at Paramount. Well, always, high, low. Where is it? What direction is it going? Cool beans, $11. The $11 is going for 23 cents. That's 2%. That was quick. Wasn't it quick? Let's go take a look at something else. You ready? A year ago, Paramount's at $14.56. Topped out in middle of December at $17.52. Our bottom of the year is right here in, what was that, June 18th at $9.54. That's high school kids can buy a stock at $9.54. Shoots up, pulls back, last 30 days, right there, last 30 days. Well, take a look at the last 30 days. What does that tell you? You can get a kindergartner, well, maybe not kindergartner, but second or third grader, say, hey, look, it was up here, now it's down here, now it's going back up. It's actually that simple. Now it's going back up. Okay, at the 11. And then there's a couple of questions you need to ask yourself. Do I like Paramount at $11? Can I see myself owning this company for a long period of time? How consistent are they with their dividends? Do I know what they do? These are certain questions you need to ask yourself before you buy anything. Do I know who they are? What am I making? If I'm buying it at $11, selling the $11 strike price, I'm getting 23 cents per share. 23 cents per share is over 2%. Okay? I'm writing pair down for tomorrow. So I like 2%. Okay, so we got some halfway decent companies to look at for tomorrow. Cool beans. All right, next on the list. Ooh, do I like Philip Morris? Okay, come on. Philip Morris. I like Philip Morris, but no. Okay, look where it is. That's at the high of the year. I don't do the high of the year because you're going to make your money buying a stock low and selling it high. How are you going to make money buying it the high? What are you waiting for it to go higher? It's like standing on a ladder waiting for someone to bring you a taller ladder. I'm going to say no thanks. For me. But if you like it, more power to you. Okay? Jose, you want to take a look at Altria, M-O, huh? M-O, going to be same thing. No, don't get me wrong. I like Altria. I like Philip Morris. But not this week. See, it's at the high of the year. Now, I'll put Altria, take a look at it again in 2 weeks. Because what I'm looking for is for that to come down. Okay? Because you and I decide how high is too high. Well, if it's going from the $40 area to the 51, that's an $11 increase. An $11 increase on a $40 stock, that's a 25% increase in April, May, June, July, August. 1, 2, 3, 4, 4 months. It went up 25% in 4 months. So when do you take your profit? It's going to be different for everyone. Everyone's going to take a look at this and say, wait a minute, I want to wait a little longer. You're going to have other people say, ooh, I'm taking it now. Okay, at some point, we're going to start taking profits, and then the stock starts coming down, and it's going to come down to a certain point where people say, ooh, that's cheap again, I'm going to buy it again. So I'm going to put Altria down for 2 weeks from today. Oh, isn't that funny? Philip Morris is already written down here for 2 weeks, waiting for it to come out of that profit. Because where was Philip Morris? PM. Same thing. See what Philip Morris is? Okay, it was at $90 back in April. Now it's at 118, 90 to 118. That's 18. That's a $28 increase. Okay, that's over 20% in a couple of months. Yeah, there's going to be profit taking. Profit taking brings the stock price down. When the stock price comes down, it's going to turn around and go back up again, because that's what stocks do. They go up, they get to a high, you got your profit taking, and then it comes down. Can you do this strategy through the week or just on Monday? All right, Travis, it's all going to be about the numbers. Okay, now here's the thing with weekly options. Weekly options have their highest value the furthest out. Now, if you're jumping in on a Monday, you have 5 days of value: Monday, Tuesday, Wednesday, Thursday, Friday. If you buy it on a Tuesday, well, now you have 4 days of value. Okay, the stock price, the option price comes down. If I do it on a Wednesday, now I have 3 days of option value, which is less, 20% less than it was 2 days ago. Mr. Darrell wants to take a look at QCOM. QCOM. Interesting, first thing, high, low. Where was it? Where is it? What direction is it going? Cool. I like that chart. That looks kind of nice. Not at the high, not at the low, somewhere in the middle. Okay. So QCOM, high, low, was, is, direction, price at the moment, 172.18 to 172.50. So go for $3. That's more than 1%. It is actually that simple. If it's more than 1%, great. That works for me. Now I want to see where it's going to go. How do I figure that out? Well, where was it? Okay, a year ago it was at 110. Bottomed out at the end of October at 104. Top was in the middle of June at 230.63. From there, it's just drop, 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 drop to the bottom, to the 30-day bottom. Here we are right here. 30 days ago, it was a 190. Now the bottom was 150. That's a $40 drop. That's a big drop, okay? From your high to your low, that's a $40 drop, okay? Now, we're going up to this direction. This concerns me because it's going in an upward direction, but Friday was a little bit lower than Thursday. Could it continue to go up? Yep, but I'm more concerned what's happening Monday. Is this going to be profit taking here? Because your bottom's here at 150, here's 172. That's a $22 increase from here to here. Again, it doesn't look it, but you look at the numbers: 150.98, 172.18. That's a $22 difference between the bottom and where it was on Friday. Could that be enough incentive for people to start selling and take that profit? Or is it going to continue to go up and challenge that 190? That's something you have to wait until Monday. Can you make 1% no stock going down? I honestly don't understand that question. I understand the words, but the way they're put together, it doesn't make any sense. Can you make 1% no stock going down? I have no idea what that means. Okay? All right. So, it's actually 11:30. Now, tomorrow is, like I said, the beginning of week number 8 for the third quarter. So we're in the third quarter. Tomorrow's week number 8. Okay, week number 8 is also known as week number 34 for the year. 34th week for the year, 8th week for the quarter. Okay, the quarter is officially more than halfway over. It's 13 weeks and a quarter, and we're going to week number 8. All right, all that being said, you guys have a great night, and we'll see you again tomorrow. Now, for those of you guys that are going to be with me tomorrow morning in the morning trading group, I'm getting ready to send the link along with the stocks that I'm personally going to be looking at tomorrow morning, all right, along with some of them we picked up over the weekend. Sorry, meant, can you make 1% on a stock going down? Well, yes, you can, okay, but you have to ask yourself, do you like that stock? And do you want to hold on to that stock? And are you okay with it going down? Thank you for another great overview. Rude Dude Invests. I remember seeing that name once before. So like, this is the second time you've actually made a comment. Now I'm good with names. Okay, Circle Project. Yep, you've been here for a while. I've seen you many times. All right, so Facebook, Susie. Seriously, Susie, either send me a DM or send Lisa a DM. It would be nice to chat with you again. Haven't heard from you guys in a while. Kind of neat to know what you guys are doing. But have a great night and see you again maybe tomorrow. Bye to Facebook. Bye to Instagram. Bye to you guys on TikTok. Bye to you guys on YouTube.